Welcome, guys. This is Nitin Kumar, and today I would just like to show you how the options strategy can be done using the monthly option strike prices for the near and the far month. And the main difference, what you will find in this video, is that. You need to know very less about the Greeks involved in the overall options game. But I think two or three Greeks, if you know how they behave when the market goes up or down, I think you can easily make money. I mean, most of the time, 80% of the time, but yes, there would be some instances where you will have to do some adjustments to the whole strategy, or sometimes, in fact, most of the times, you will find that you don't have to do the adjustments. You can just book the profit, or in case you have been in deep losses, you can just book the very minimal loss when it comes to low loss, because I am not in favor of having too much adjustments done, because adjustments actually gets you carried away and you start fighting with the market, and that leads to losses. And this is not a bookish knowledge. I have been doing it from last 5 years, and I know that fighting the market doesn't help. Okay, so let's start. This strategy that is coming on your screen is primarily a kind of, I would say, an iron fly and calendar spread mixed up. And you will see that in this whole strategy, what I have done is that I have sold the near month strike prices, that's the ATM strike prices, the at the money strike prices for Bank Nifty. And I have taken the similar, I would say, the value of the option strike price from the far month, and I have bought it. And this whole thing has been done with four lots, and you can see the overall probability of profit is 49 percent, around 49%, and the range where this whole strategy will be profitable will be having a range of almost 1,000 point up and down, and the max profit can go to 1,22,000, while the max loss can go to almost a lakh. But I would say don't be carried away with the figures that is shown in the max profit and max losses. Mostly, I would say you can keep a target of not more than 15 to 20,000 for these kind of strategies. And if you are able to get 15 to 20,000, I would suggest us book the profit, and then again study the market if the texture of the market has changed, and create your different strategy. Currently, my thinking behind creating this strategy was that the whole market doesn't seem to have, I would say, an upward bias. Rather, it is a range bound market with Bank Nifty as well as Nifty just fluctuating in the range. And with this global events happening and the Fed increasing the rates, I think for some time we will be just trading between something like 14,000 to 16,500 in Nifty. There also, I think 14,500 to 16,500 is a good range to trade. So, and in Nifty, I think 32,000, sorry, but in Bank Nifty, you can have a range of around 32,000 to 35,000 for now. But yes, in the coming videos, I will also let you know how you can increase the overall range by creating a different strategy. And usually I play with the range, and if the market is going down, I go with the Vega positive strategy. Whereas if the market is going up, then Vega negative strategy usually I deploy. I won't say again that I'm 100% correct, because these days markets are very volatile, and with the global events and Russia-Ukraine war and crude pricing, everything starts changing very quickly, and your strategies may become obsolete. So that's why I tell you that don't get I would say, carried away with this profit margin and loss. Just go for your target and book the profit. So that's all for today. Thanks. This was my first video, just kind of test. And going forward, I will be maybe much, I will try to make it much elaborate.